The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got almost 30 minutes to go until the start of trading. Quite a day to the positive side yesterday. We'll see where today goes. Amazon, a little bit of a head fake last night. Strong numbers after the bell. But boy, they talked about that they're seeing 500 basis points, Amazon, in terms of the difference with the growth rate in Amazon Web Services for the quarter they just reported this month alone. We'll jump to it, but that was the headline last night on the conference call. Their CFO stating April alone, they are seeing growth in AWS that is 5% below what it was at for the first quarter. Now, we'll jump right into Amazon, okay? Now, we get inflation numbers this morning as well. There's the head fake last night. You jump higher on strong numbers for Amazon. They guided strong as well. Okay, you're talking about next quarter. How about $127 billion to $133 billion? That's the range they put for revenue next quarter, okay? The estimate was about for 130, so they give themselves $3 billion on either side. Absolutely remarkable when you look at these companies, man. Over 90 days, they're going to be taking in about $130 billion. But guess what, man? Their cash cow is AWS. And listen, longer term, Amazon's going to be just fine, okay? They have quite a hold on cloud. They are still growing in double digits. And the worry, though, is that they get into single digits on that. A little bit of a slowdown. We'll see if the market gets a little bit freaked out about that. One statement in their earnings call talking about that AWS is slowing down. We'll jump into it, but let's take a look at the markets this morning. S&Ps were off about 9 points. That's going to tie into some of the inflation data, although all things considered, you look at the number on 830, we're positive by about 5 points. Very low volatility around those inflation numbers, coming in pretty much as expected. Again, we'll go over them. Excuse me, but still strong numbers, man. On a core basis, year over year, you're talking about 4.6%, man, at a time when we're seeing inflation persisting and the consumer potentially pulling back. And it would make sense, right? In terms of inflation is not going to get squashed as the economy slows down simultaneously. The order of events is the economy slows down, forcing less buying, giving companies less of an ability to raise prices. The economy slows down, causing job losses, rolling back a lot of the wage gains that have been coming recently. Okay, companies are cutting jobs. They're not going to be given 8 to 10% pay raises, which they have been recently, if not even more, right? So the order of events is you get the economic slowdown, which then tames inflation. Whether that persists is the real X factor now, because we have the economy slowing down, almost undeniable at this point. We got a GDP print yesterday. What was it, 1.1% annualized for the quarter? And now what you have is you have inflation persisting as the economy slows down. The other side of that is that what tends to happen is that that's always how it goes when you get the slowdown, because you get the slowdown first, prices take a moment to catch up, then inflation pairs itself in terms of inflation pulls back because the economy's pulled back, and you don't get stagflation, which is rising prices in a slowing economy. But man, we might be getting it right now. And again, the only difference is you just have to factor in how long you think that's going to persist. And if I'll say anything, folks, things have persisted longer than anybody has expected this go around. We are now 3 years into COVID. Absolutely remarkable. Number one, that was 3 years ago. Talk about a quick 3 years. And it seems like things persist much longer than we thought they would, right? In terms of just talking about the markets, let alone COVID, in terms of where you are. So we'll see where we go today. You jump over to the VIX, man. It was quite a day yesterday. There was almost no selling in this market. Surprised we didn't even get down to a 15 in the VIX. You trade down to about 1675, get you a little bid in the pre-market as you had markets in negative territory. This morning, though, we're back to under 17, 1689, the volatility index. Man, we got some action all over the place. Bitcoin this morning, down about $500. We're trading at 29,455. Crude is catching a bid. Look at that volatility in crude. You go down $1.50, you get back the $1.50, all in the overnight session. From about midnight down to the lows at 5 in the morning, you're back to about $75 in crude. We got to talk some natural gas, man. There's your natural gas contract. They're talking about it in the den, rightfully so. Whether you're trading natural gas, whether you're trading some of the ETFs, oil, etc., some of the doubles and triples in that market. Boy, you talk about volatility in natural gas. You're up by 5 pennies right now. You were all the way to 252. You're trading at 251. We jump over to the gold contract. We got some action in the dollar overnight. Gold, $19.93 this morning, down $5 on the session, but bouncing from where we were in 1985. We jump to notes and bonds. A little bit of a reversal of what we've had going on. We have the 10-year, 3.44%. Was that about 3.5% when I came on the air yesterday? You got all the way down to 114.19, and just like that, where are we? Excuse me. We're kind of right back to where we were at 8:30 in the morning yesterday. Remarkable volatility in yields, and we just have so much to digest, right? We talk about Amazon. So there's the Amazon action. They're down about $1 to kick things off. Boy, it was quite a day across the board yesterday. Even Amazon, right? Trading up to above 110, almost 111 for the highs yesterday. That's from a price point of 102 on Tuesday, folks. You jump over to the other FANG stocks, just a rip-roaring rally. Microsoft up to 305. They're holding on to the gains right now for Microsoft shares. How about Apple surging higher, right? Apple, folks, I say it all the time. You got about 16 billion shares outstanding. This thing traded from 165 up to 169 yesterday. You're talking about $60+ billion in market cap added to Apple alone. And Apple, been taking a look at this trend line, man, would be remarkable if we break above this trend line and you accelerate higher. On a shorter term basis, we put it on a daily. You got just above that price point. You trade back, and that could be a breakaway, man. Up to 168.41. We will see. On the flip side of that, jumping around to some of the companies with numbers last night as we continue the market wrap up. Snapchat, not the story of tech, man. Snapchat is its own anomaly, folks, and I would be very careful of this equity, okay? Anecdotally, I don't understand the appeal of Snapchat. And that's somebody who can understand the appeal occasionally of social media apps, which in general are horrible for your mental health in general. You should keep time limits on it and don't get caught up in the feedback loop of social media because it is full of people that like to complain about everything, whether it's life, politics, religion. You want a spot to complain where people can hear you, and you want a spot where they will foster that animosity, because the most comments you get on a post, folks, is the most argumentative post, and that is an interaction which social media loves. But nonetheless, I can enjoy watching, taking a look at some Instagram photos occasionally, right? Keeping up kind of what made social media so cool in the beginning, right? When Facebook first started, becoming friends with your friends on Facebook. You see all the pictures. But guess what, man? Snapchat? No, it's not happening in any way. We'll get into those numbers later in the program as well. We got a lot to talk about, man, let alone we got earnings next week. And Intel on the flip side. How about Intel charging higher, man? You're up by almost $2 to $31.60. And yeah, they had some good news on their conference call. You spike higher on their numbers, they pull back. Intel charging higher. We're just almost at $32 right now. Intel trading $31.53. As we got pressure on the markets, we got a lot to talk about, folks. When we get back, we are going to get into the inflation numbers. Inflation gauge watched by the Fed shows prices still rising while consumer spending stalls. Core PCE up 0.3% in March. Second month in a row. That's 3.6% annualized, folks. Stay tuned. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P's negative by about 0.7% right now. That's about almost 0.2%. Excuse me. S&P's negative by 7 points right now. That's about 0.2% in the red. You got the NASDAQ 100 barely in the red right now, 13,221. You got the Dow off 0.3% right now. The Russell off by 5. We got some First Republic news as well, right? Maybe they're getting saved. Boy, that is remarkable, man, because I saw the headline, catches a bid. Boy, if you're talking about catching a bid, folks, is a 30% pop in a stock that's down from $16 to $5 this week alone. That's not what catching a bid looks like. I was actually surprised that even if they get bailed out in terms of where this stock ends up right now, because you're still talking about an equity, folks, that's valued at about $1 billion. And realistically, their business probably has no value going forward in terms of being a bank, having confidence from investors. Their balance sheet's got some problems, and it's done them in. And that's the scenario. So it'll be interesting to see if they do get bailed out, where that ends up on the equity price, because I think it's path to zero right now. And I think we saw the writing on the wall Monday night when they came out with their numbers. But nonetheless, interesting that you do get that headline, right? Let me see if I can pull it up here. Intel, Snap, Amazon. Here it is. Gains on report. Yeah, that's out this morning of potential rescue plans. Well, folks, that's not what a gain should look like if a rescue plan was coming to any concrete manner. Be careful of First Republic out there. And again, this could be one of the anomalies where just their name alone has so much poison associated to it right now. Very difficult to imagine continuing with that entity in particular, okay? And everybody's dealing with woes in the banking sector. CD rates are going to remain high, as they're going to have to fight for capital. Okay, they have to. They need that capital on their balance sheets to reinsure investors that they can actually provide the depositors their money back if they want it. That's a remarkable thing of a bank, right? It's a self-fulfilling prophecy. No bank can withstand a bank run if it happens quick enough. No bank, because the duration of their investments is usually not able to be available immediately, right? But you don't get a bank run if you can assure your investors that they'll get the money if they need it. Well, the moment that they don't think so, folks, everybody runs for the door, and it's what's happening with First Republic. And it really doesn't stop, because there's no reason for it to stop, because there's very little value for investors being in one bank versus the next. And if one bank versus the next risks actually failure, then number one, if you're over 250,000, I know I'm saying normal stuff, man, but we're watching these stocks fall off, folks. And I was doing my program Tuesday morning saying, what's this stock doing at $12? It's still a $2 billion equity at that point. I said, is that really a business somebody's going to come in and buy for billions of dollars? No. Well, today it's under $1 billion. We'll see where it goes from there. Let's jump to those inflation numbers, okay? Where are we? There we are. Okay, getting into the numbers. So we get a few different numbers this morning. Personal consumption expenditures price index. Excluding food and energy, okay, now this is the Fed's preferred measure of underlying inflation, the core PCE, up 0.3% in March, 4.6 from a year earlier, and that is just in line with where we were February as well. Folks, that is a lofty number, man. You're pushing 5% inflation on a yearly basis, and you're not seeing a huge outlier in terms of the base effect from a year ago, because February and March come in at 0.3%. Annualized, folks, just multiply it by 12, and you're dealing with yearly inflation, if you extrapolate it out over the last couple months, of about 3.6% on a core basis. That's not getting you to 2%, folks, and that's the core, and that's what's been sticky, and it looks like it's still a little sticky. Now, the Labor Department's measure of employment costs, okay, increased 1.2% in the first quarter from the previous period. 1.2%. Folks, they wanted it like 2%, right? They want the economy to be paired right now. They want a slowdown. You multiply that times 4, you're dealing with 4.8%. That exceeded forecasts, okay? Now, they say, we got a Fed meeting and decision next week. We get the decision Wednesday, May 3rd at 2 p.m. Eastern Time, press conference to follow. That'll be an interesting one, I imagine. All but assured, you're going to get a 25 basis point hike, especially after this data, okay? All but assured, you're getting the 25 basis point hike. Hard to deny that there are not slowdowns occurring in the economy, right? We got layoffs. You're seeing cloud potentially taking a hit on Amazon, the leader in cloud, not the type of growth that the market's looking for, at least going forward. So that is working for the Fed, but what's not there yet, man, is the writing on the wall that we're going back to 2% inflation, okay? And the Fed cannot take their foot off the pedal when we got core PCE running at a rate of 3.6% if you just look at the last couple months. Think about that. Think about how drastic prices have risen over the last couple years, and even in the last 60 days, we are on an annualized clip of 3.6% for core PCE. What complicates this situation even more is that that's the core that the Fed's going to focus on, okay, because they cannot control the other factors like energy as much as they can control core prices that are more tied to the economy versus the influences going on when you just get an OPEC plus cut. OPEC plus can control energy prices, so if the Fed let their rate policy be driven by energy prices, you could see how that could get out of whack when really, you really got to crush a lot of things to crush oil prices if you got OPEC plus just cutting production to raise the prices. So you're at 3.6%, but what could happen? Oil could go up, complicating the situation even further, because if you see rising oil prices, folks, okay, and I think there's going to be a lot of pressure on oil as we come into a price point of $75, and you look longer term on this, okay? What we've done, we talked to our man Teddy Kegstad about it on Wednesday, man. We filled that gap. We filled the OPEC plus gap. Now, we know how OPEC plus feels when oil gets below $75, okay? Got to 64, what did they do? They came out with a surprise cut to assure the stability of the price. Yeah, basically that's saying the line's in the sand, man, okay? $73, there's no reason for crude to be below that price as far as they're concerned. There is all risk to the upside here. I do not see crude tanking like it did during the pandemic or something like that, okay? Yeah, we had a one-way trip from basically negative prices, if you recall, April during the pandemic, right? We got negative prices in terms of the closure of certain futures contracts. I think it was the March or April. Was it the April contract in particular, I think, where nobody could store it, and the contango effect of rolling and everything to it brought oil actually negative on a rolling basis. On this chart, I got it at $6.50. You jump up to $1.30, but that world is not happening right now, okay? That was a hopefully once-in-a-generation event in terms of the shock to the market, and people were just not, first of all, they weren't even aware of the rules of what they were trading, right? Do you remember the stories of people buying or selling futures contracts and thinking that the worst it could do is go to zero? Not the case, folks. The worst it can do is go to negative. Why? Because nobody could store oil, and people were willing to pay you to take their oil. Imagine that trade, right? The article's written at the time for the people who actually had storage or actually had the ability to take the oil. You were getting paid $35 per barrel to get gifted a barrel of crude, which if you could hold it and store it for a couple of months, you got to turn around, even a couple of years, and sell that barrel. So you got paid $30 to $40 to take it, and then you got paid by somebody else, of course, to sell it because it's a commodity that has a lot of use. Those worlds are not coming back right now. Okay, so if you take that out of the equation, risk-reward-wise, I see a lot of risk to the upside of crude. That could complicate things for the Fed because if energy prices go up, everything goes up, even if they don't have the influence. It'll make it even more difficult for them to begin cutting, is the point. All right, folks, this is going to be an interesting open. We got S&Ps right now, down about 10 points. You're going to have the market digesting. What is it going to be digesting? Amazon earnings, inflation numbers, pay raises. Stay tuned, folks. We'll come back for the opening bell. We'll be back in 3 minutes.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, slightly in the red. You got the S&P negative by about 6 points right now. NASDAQ 100 barely in the red by 2. I got a chart of the dollar index up here. You talk about some moves, man. As I jump around, just one moment for me as I pull this up, folks. You talk about some moves, right? Overnight, let's back it up a bit. This is a 15-minute chart from where we are. You saw volatility yesterday. Okay, but man, when we had that dollar dropping from about 9:45 in the morning, right? You dropped from 101.80 down to 101.50. Listening to my dad's show last night, he's right, man. Absolutely remarkable how this market just accelerated higher on a little bit of a weaker dollar. This morning, you charge higher to 102.10 in the overnight session. We give it up a bit right now. S&P is only negative by 5. Let's check in on the big dog of last night. Amazon plows higher after they put out a little bit of a worrisome tone on the growth of AWS. Let's check in on some of the other equities I talked about. Snapchat down almost 18% on their weak numbers. Intel up 5.8%, we'll call it, trading at 31.60. You spiked to 32.25 on the open quickly before you give it up a bit. Yeah, it's going to be interesting to see where this market goes, man. Now, I was talking about the SPY yesterday, folks. I was talking about a possible short. Boy, I hope if you even thought about it, you examine the area, because the way I was talking about this, what was nice was you had your back against the wall, okay? And you can give yourself some room in this market because, boy, you catch the right move. It's a large move, so you can give yourself some room, saying maybe you could scale in, right? You had a nice channel line. Maybe that was the area. You even could have waited till 408 to get in there potentially as you get above and below. But if you were getting in there on that channel line, folks, I hope you gave yourself some room and got out, because maybe 409, because that's the thing with channels, right? You see it where it was even on Monday, and boy, you want to see a breakout, man? No, that doesn't. The cues are where I have it up. Check it out. There's your breakout, okay? Well above that area pre-market yesterday, and you're talking about breaking out of that area. Now, how remarkable, man. The cues were up $11 from where it was the close of action Wednesday to the close of action on Thursday. You had the whole index up almost, 3%. But yeah, we had all the big dogs doing it as well, and we'll see if today they digest it. Absolutely remarkable, I think, that Amazon, yeah, they get a little sell-off. I was going to say remarkable Amazon's positive, because AWS, so much of what's driving that company forward, and the headline is there. Amazon jolts investors with talk of cloud growth slowdown. Hesitant demand for technology overshadows the quarterly results. Yeah, because this thing accelerated higher, man. Amazon Web Service revenue was up 16% to $21.4 billion in the first quarter. That's 90 days, man, right? Absolutely remarkable business when you think about how much they are pulling in. The weakest growth rate, though, since Amazon began breaking out the unit sales. They're decelerating, man. You can't deny it, especially when you add in the comments in terms of from their CFO. Let's see. Where's the quote? Maybe it was in another article. It's going to be here somewhere. They talked about AI. I want 500 basis points, because that was the quote. All right, we'll find it later in the program. But literally 500 basis points was what they talked about in terms of the growth rate for April versus where they were for the last quarter and the last part to end with. So that would mean they're at about 11%, right? They're at 16% for the quarter, and they just said, hey, in April, we're only at 11%. Well, there's two sides of that, right? Was there a clamp up in March that contributed to the 16%, right? So what did March come in at? You know they're going to try and set the bar low. Any company would try and set the bar low if they could, if they didn't get punished by it. Now, Amazon got punished to the tune of like 8%. I mean, you're talking about almost $100 billion market cap volatility last night, above and below where they closed at. And we are right back to basically down $3.40. So, yeah, you're down 3.1. Market paying attention to this as well. I said I'd be surprised if this thing finished positive, because that is a stark warning. Now, you could say, hey, those were really strong numbers. They still guided to where they're talking about $127 to $133 billion is what they're looking at fiscal year, I believe. You take those numbers right in line with estimates, okay? They're trimming the workforce as well. But the last part about AWS, man, they entered, now this is a interesting way to phrase it, okay? They entered 2022 with quarterly sales in AWS at 40% year over year. Folks, when I just talked about crude, and I talked about crude in the year 2020 and 2021, that's not happening again for equities as well. And that was 2021, okay? And if you remember what Amazon shares looked like in 2021, we back it up. Yeah, the market had priced in that 40%. at $180. Okay, the slowdown began, the hikes began. Amazon traded from $180 to $88. That's when they were priced in 40% growth. They have 16% growth for the last quarter, and now they have 11% growth for the month of April. I'm sure they have volatility in those numbers. I'm sure that they took the opportunity, I'd say, to present the strong numbers they had with their earnings after the bell. And instead of foregoing that and saying, we're going to ride out the quarter and hope we hit it, you say, listen, we're going to deliver some bad news a little bit too about AWS, because we're going to have a little bit of goodwill on all the numbers we just delivered. We're going to drop a little bit of bad numbers on top of it. Maybe that will quell some of the fear of talking about 11%, because, folks, what if they had led with that? What if the first thing that came on the newswire, right, was that, and I'm an Amazon bull, man. I got Amazon money in retirement. I'm not selling it, okay? Long term, that company is going to be fine. They're still growing a segment that's $20+ billion at double-digit growth, okay? But I think the market might be a little freaked out by that, man, because that's a big number when you go to 11%. If they had led off that AWS growth this current quarter is at 11%. Now, what if it's on the decline? What if they were at 16%? What if it's at 11% this month? And what if it's on its way down to 10,986 and they start doing growth numbers of 7 or 8% in AWS? AWS is a powerhouse, man. It's given Amazon the money and the cash flow to do a lot of things that they do. And yeah, so we'll see where we go from there. And they're dealing with AI. They're dealing with all that. Now, what they have done, okay, and they mentioned this in the article in Bloomberg, they're relying on the more profitable business of selling services and advertising. Kind of ruins the user experience, so they have to be a little close there. But the numbers are staggering. First quarter earnings reflect that shift. Advertising sales up 21% to $9.51 billion. How about seller services jumping 18% to almost $30 billion in the quarter between advertising and seller services? They are now doing almost $40 billion per a quarter. Total revenue increased 9.4%, driven by these two numbers, okay, to 127.4. Market was looking for 124.7. So you're going to see these numbers become more and more important, man, if AWS stalls out a bit, which it definitely is. And there's going to be a lot of importance, yeah, as Amazon's off again, $4.20. I'd be careful on Amazon today, man. And I love Amazon. Maybe it's a buying opportunity. If you're looking to get in Amazon, maybe pick a line in the sand, $90, $100. You could scale into this thing longer term, because I imagine there's going to be weight to the downside, man, because AWS not going to be growing at 40% probably ever again on those numbers. And that's as an Amazon bull long term, man. 40%, those days are over in 2021. Stay tuned, folks. We'll take a look at some of the other equities moving this morning. Yeah, we'll talk a little bit of oil and Exxon and Chevron when we get back. Stay tuned.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P negative by about 3 points right now. NASDAQ 100, you're off by 48 points right now. You got Amazon shares continuing to drop off $5.27. Yeah, pay attention, man. Off 5% now for Amazon. As I said, I'm an Amazon bull. But when I saw the numbers, and you talk about a 5% difference, you're at 16%, and they're saying AWS growth is at 11. I repeat it because it's a pretty stark warning right now. We jump over to some of the other FANG stocks. Microsoft up about 0.1%. The last part about this is that doesn't mean they're losing out to competitors in that same degree. Okay, you could have a slowdown and you just have Amazon as by far the industry leader, and the market share to be gained on a percentage basis of what they have, very difficult to replicate the percentage numbers when they're where they are as the leader, and they're at a level of business that's $20 billion plus that they now have to grow on a percentage basis. You jump over to Apple shares, up. Apple rolls over. Be careful in this market today. I said it yesterday. But Google shares off about 0.7% right now. Intel up 6.7% on their numbers. And let's jump back to Snap for a moment. We'll go over their numbers as well. Snap, I could just see Snap dropping again, man. Not a bull on Snap, to put it lightly. Snap off about 18%. It had a huge move factored in for their numbers, though. You're talking about double digit in a big way, 10+% on their numbers. So the market was expecting volatility. And let's jump over to Snap. So the headline, biggest drop in 6 months after sales fall, first decline in quarterly revenue. That's worrisome, folks. When you are declining in quarterly revenue and you're still much more of a growth company than some of those other larger companies, you're only talking about revenue here of $1 billion. It sounds staggering, but not when you compare it to what I just talked about on Amazon, right? Not when you compare it to some of the other social media companies. First quarter revenue fell 7% to $988.6 million. The market was looking for $1 billion. The forecast for second quarter revenue, 1.04. That's a miss as well. They're looking for 1.1. They got a new platform or something like that. Yeah. Continued disruption in demand for advertising caused by economic pressures and Snap's own product changes. So it looks like they get some changes there. They're hoping for a long-term benefit, but short-term, it's causing some problems. They have 383 million users daily. That's quite a number, man. You think you could monetize that, and they are monetizing it. Average revenue per user is $2.58. So think about this, right? When you think about, and what came to my mind is Elon with the blue check mark, and he's got much bigger plans for Twitter than the blue check mark. But you see the ability for these companies to make money via advertising that they could never, ever make by charging anybody to use their product. There's no way that they would have 383 million users all sign up to pay money, even $2.58 for that product. But guess what? When they do that, they get to a number that's almost $1 billion in revenue. They charge nothing, and they're pulling multiple dollars per user. It's staggering when you think about it. That many users, and they're adding up the costs, but that's why they're worth so much money. The one thing I did find interesting as well, and I've pulled up Snap, as I mentioned, the company now has more than 3 million paying users for a subscription offering Snapchat Plus. Meanwhile, the company rolled out last quarter augmented reality technology that it's selling to retailers to help shoppers try on clothes virtually. Well, Joey, you solve that one, yeah, you'll be worth a lot of money. But there's a lot of competitors trying to use augmented reality and your phone and your camera to be able to help you try on clothes that are in a store. Because that's a big battle right now, right? The one thing people aren't quite comfortable doing, buying clothing, because you can't try it on. Maybe at least buy a couple of them, return one of them. Return policy, very important there, and companies deal with so many costs, knowing that most people buy a couple sizes, maybe return one that doesn't work if you're buying clothing. But that's just saying they're doing it. That means nothing. 3 million plus paying for the subscription offering, that's going to mean nothing to this company in the long term, folks, and I just told you why. Okay, it's all about advertising, it's all about people, and they're missing the numbers. And Snapchat, what they're doing here is that they're trying to have ads that prompt users to take an immediate action, like clicking to buy a product or signing up for an email list. It's a change that the company expects will boost revenue in the long term, but is so far disruptive. Hear that line again, okay? Because I read that. Folks, advertisers would love to pay for an ad where you know that somebody is going to sign up for your product that they're going to pay for, or just make sure they give you an email, okay? Everybody loves that as a business owner. It's very difficult to do. People don't like to click on things and buy things on the internet and be prompted, and they definitely don't like to click on things and put their email addresses in there because they're very familiar they're going to get bombarded, okay? So they're just saying, once we get a hold of this and we have people that are just buying things by clicking on them and signing up for email addresses, we're going to make a lot of money. Well, that's true. Can they get there? I don't know. The market doesn't know either, man. The core ad business under pressure, to put it lightly, and Snapchat paying for it this morning, off by 18.3% as this market rolls over to positive territory. Intel still up on their numbers, 6.6%. We jump over to Amazon. No, not helping, man. Apple shares down 0.3% right now. Microsoft shares up 0.3%. Google shares down 0.8%. We jump to the oil companies. Let's see how crude's trading. Talk about making some cash, man. Crude, flat on the session right now. Volatility in both directions. That's a 1-minute chart, actually. Let's put it back to 15 minutes. So you can see the dive lower yesterday. 2 days ago. We're right back down at those lows early this morning. We're trading at $75 for crude. Excuse me. And we jump over. Where are we? Maybe this one. There we go. Exxon Chevron profits. How about it? Robust, even as oil prices drop. So we'll jump over these two equities. With their numbers this morning, there's Chevron down about 0.6%. ExxonMobil up by about 1.25%. And what it talks about in here is just, man, even with crude where it is, even with prices pulling back from the record earnings they had last year, they still pocketed hefty earnings that beat analyst expectations. Exxon's quarterly net income 11.4, Chevron 6.6. Yeah. Absolutely remarkable, those numbers, man. And the stocks are trading higher. Exxon's earnings from its oil and gas production rose 44% globally as it increased output in Guyana. Guyana offset lower profit in U.S. shale. And its refining business. Refining is a big one for these companies right now. $4.2 billion in profit versus a $196 million net loss in the comparable period last year. Yeah, refining. Not bad, right? Exxon up 1.2%. And taking a longer term look at these, it's just a one-way trip, man. Even as you saw crude pull back, right? From where we were in March alone, you got Exxon just within pennies of that high, man. Well, look at that. Within 3 pennies, we just made it that high. Maybe that's the rollover, man, in crude. 119.60. The high was 119.63 for Exxon. Let's see how Chevron did. Well, they're not going to make new highs. Different story there for sure. Yeah, but just off those levels. 189, you were pushing 173 coming into those numbers. You're basically flat, down 0.6% for Chevron shares. As you get the NASDAQ 100 slightly in the red this morning, you jump over to the dollar index, see how it's moving. That's the weekly, excuse me. Yeah, sitting at about 101.90. Almost the highs of Tuesday for the dollar. We were above 102 briefly earlier. We check in on the gold contract. Gold with some volatility, man. Check it out, right? As this market tries to find where it's going ahead of Fed week, man. Absolutely remarkable in terms of the volatility. We made it through the tech earnings, pretty strong earnings. Amazon, probably the weakest of them all this week with that cloud warning. But we come into Fed decision on Wednesday. Market shaking it off, man. S&P's at 41.55. One more segment. Stay tuned, folks. I'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps pushing basically the highs that we had pre-market. You're up at 41.56. You made it to a spike high of 41.68 in the S&P last night, right at that 4 p.m. BR. And that was the thrust higher, folks, on the Amazon numbers, which did not hold, right? So the 41.68 was only on the optimism of the Amazon numbers before we got the idea that actually AWS was probably growing at 11 to 12% coming into this current quarter in terms of guiding down. We're right where we closed out yesterday. And boy, it was a one-way trip higher on yesterday's prices, folks. And we're sitting right at that price level. So we'll see where we go today. NASDAQ weighing on things just a bit. Amazon off the lows by about 60 pennies, but I don't imagine that's going to catch a lot today with AWS potentially being in the single-digit growth. Because it would make sense that if they're growing at 11% in April, they were growing at 16% for the first quarter. It's going to be very difficult to get that number back up into May and June with where the economy is right now, with where just basically sentiment is right now. We come into a Fed decision Wednesday, May 3rd. You know what else we got on May 3rd, folks? Our man Basil Chapman is doing a live 90-minute webinar, okay? An hour and a half, Wednesday evening, 4 till 5:30 p.m., right after my dad's program. The webinars we do are hosted on our TFNN Discord server, folks. That's where we host the Tiger's Den as well. If you haven't checked out the Tiger's Den, man, it's $1 for the year. We only charge $1 to just validate everybody's ID to basically make sure that we don't get spammers and bad actors in there. $1 for the year for the Tiger's Den. If you're in the den, you're just jumping into a separate room. Basil will be in there for 90 minutes. That is Fed Day, which is pretty cool. Wednesday, May 3rd, we get Apple earnings the day after that. May 4th, you get the opening call for a month, folks. It's $149 for the month. You can sign up for the 6 month. You save $199. That's $695. Or you could sign up for the year, $1195. You save $593 versus the $149 a month. The reason why I mentioned the 6 month and the year is if you're thinking about staying on, folks, all of these come with a 30-day money-back guarantee, okay? So sign up for the month. You get the opening call. Basil puts out an outstanding update on Saturdays, usually a video. And he's out today, so we're going to have a replay. But go sign up for the newsletter because he's got his newsletter out this morning. He'll have an update tomorrow as well. We'll be back for the 10 o'clock update in a moment.